Hola mi gente, welcome back to the channel. It's Sean from We Are Investing, a channel that's dedicated in investing in personal finance. I want to go over some trades that we executed this week. The reason why I want to do this is because I want you guys to see the strategies that I'm implementing and the results that I'm getting. Also, be aware that on the Patreon this Sunday, I will provide you guys with some more plays. So if you want to see what I'm looking at for this week, then join the Patreon. There will be a post very similar to last week. And I'll also create a YouTube video, but I'm not going to give you guys all of the plays. And like this week, there were some plays that we entered in midweek that were profitable as well. Those plays are posted only on the Discord because I don't do a report every single day. I don't want to bombard you guys, and I also don't have the time to physically create a report like this every single week. So what we're going to do on this video is we are going to go over the plays, the top option plays this week that I provided to you guys on September 5th, which was Sunday, and I will provide another one this Sunday as well. We are going to look at the plays. I'll give you guys a brief explanation on what the play is and why I got into it. And then we'll take a look at the reward or the loss. And then we'll take a look at the charts and kind of explain the trade so you can see the strategy. Now, the first one was Zoom Video. This was a bull put spread, and I received a credit of $2.50 in premium. So per contract, I received a credit of $250. The options were $290 and $280. So my break even was $287.50. Now, if Zoom is above $287.50 by expiration date, but I did close out of this position, the expiration date is September 17th, and I closed that position out. I am getting $250 up front, and the max loss to me, if Zoom is below $280 or at $280, is $750. If we take a look at where Zoom is right now, we can see that the stock is well above $290. It's at $301.50. But I actually ended up closing out of my position. If we head on to the Discord, we can see that I closed out of my position. I closed out today at 10 a.m. Now, the credit received up front when I initiated this trade was $250. I sold that then for $145. So I got to keep the difference, which is $105. So with that being said, the gains on a percentage basis for this trade in 1 week were 42%, which isn't too shabby. And the reason why I wanted to get out of this trade is because I was happy with the gains. And honestly, there were some times this week where Zoom was getting really close to being negative, and I didn't like that risk anymore. As you can see here, we got to a low of $290 for Zoom in the week. And that was pretty much really close to my break even. And this was getting kind of scary, but it stayed the course and it moved up on Friday. And I was able to close for some pretty nice gains on this trade. Now, the reason why I like that trade is because leading into this week, the market would not have a red week. But actually, this week for the market was negative. It just kept on going down and down. And even though we had a horrible week with the overall market, we were still able to keep most of those premiums, which just goes to show the strength. When you have a bull market and it seems like every single week it's going up and up, except for this week, then these kinds of trades are going to be profitable most of the time. And even when you have a week like we did this week where it was negative, it was still profitable. So it takes a pretty drastic move if you position yourself correctly to be negative on these trades. Because of that high probability, that is why your risk is higher than your reward. Because most of the time, these trades are going to be successful, especially if you know what you're doing and how to manage them. The next trade on this report was Upstart Holdings, and this was the best trade of the week. This was a bull call spread. So the risk is how much we paid up front. The debit, which is your risk, is $2.25 in premium. So that is $225 per contract. You are putting up $225 to get into this trade. But your potential reward is the spread between those two call options, which in this case, the call options are $255, $265. So that spread is $10. You times that by 100, and that is how come your potential reward on this trade is $1,000. So if, in this case, for this trade, if Upstart Holdings is over $265 at the end of the expiration, you're going to get your max profit. Your break even is the low strike plus the debit that you paid. So in this case, it's $255 plus $2.25. So my break even point is $257.25. Now we got out of this trade today, and we got out at around 10:30 a.m. We got out at when the spread was $9.75. Now keep in mind, we paid $2.25. So the gains on this trade were 433%, and those are pretty wicked gains in just 5 days. Now, if we take a look at Upstart Holdings for this week, it started at around $227 and it closed at $270. Now, keep in mind for this trade, our high strike was $265. So if I held to close, I would have been 100% in the profit, and my profit would have been $1,000. Instead, I sold today at 10:39 a.m. and I received $975 in profit. And at that time, the stock was much higher. But I was happy with the gains. I probably could have held, but at that point, I wanted to close my position because on Friday, there's typically a sell-off, and I like to try to close my positions before lunchtime because lunchtime on any given trading day can be a time where volume is low, and usually there's a sell-off, and also leading into the weekend, there can be a sell-off as well because traders don't want to hold that risk over 2-day weekends. The next stock on the list is AMC. Now, this was a bull put spread, and the expiration was 9/10/2021 at a $43 and $42 strike. I received $51 in credit. So essentially for this trade, if AMC was above $42.51 at the end of the week, I would be able to keep 100% of my credit. And that's exactly what happened. This trade was very simple. We found a support and we said, I don't think AMC is going to drop below that. And it blew past it. It's at $50. So for this trade, we got to keep 100% of the credit. So it's a 100% gain in my book. Now, the next stock is DraftKings. Now, this is a bull call spread. This is the same trade we did for Upstart Holdings. The risk to us is how much we paid in debit, how much the premiums are. In this case, it was 35 cents, so $35 a contract. The options were the $62 strike and the $63.50 strike. If DraftKings closed above $63.50, I would have been 100% in the money, and my profit would have been $150 per contract. My break even is the low strike, $62, plus the premium of 35 cents. So my break even is $62.35. Now, I actually got lucky on this trade. Let's take a look at the profits. For this trade, I got out when it was $1.06. So 302% gains, and I got out right before 10 a.m. DraftKings actually sold off, and I was pretty close, so I wanted to get out considering the typical sell-off, but this Friday was a little bit more dramatic. The week was a red week overall for the major indices and the overall market. If we take a look at where this stock ended, it ended at $62.46. So I still would have been profitable. I would have been just over break even. But because I sold when the stock was over $64, I wasn't 100% profit or max profit, but my profits were pretty darn good. So this trade, I actually did get a little lucky because I sold at the top of the day pretty much, and it was a good position. The reason why I got into this trade is because I expected some kind of run up like this. Thursday was the start of the NFL season, and I do believe that these kinds of stocks will continue the momentum for the upcoming weeks as we get more and more exposure to sports. Now, the last stock that I want to talk about, and this I got into midweek and I posted on the Discord. I did not post this on the Patreon. I did not create a report for this trade, is SPRT that expired today. This was a bull credit spread between the $18 strike and the $23 strike. I paid $1.45 and I closed this position when it was worth $4.45. So the gains to me were around 300%. This was a great trade as well. And this was a trade that we got out before the sell-off, so we were able to lock in those gains. It's always good to lock in gains when you are up a decent amount and you think the market is going to take a turn, which it typically does late on a Friday. So when I get into these spread options that expire, I try to close them on that Friday before lunchtime. Now, what I also did is I did some covered calls. I did covered calls on stocks that I am invested in long term. And I try to convert these stocks into income streams while also holding them long term and in some cases collecting a dividend, which is the case for ExxonMobil and Ali. And I am long term in Chewy. I added some shares on the most recent dip, but I am also selling covered calls to try to hedge my position a little bit weekly. And all of these were successful. I kept 100% of the credit. So the strategy that I want you guys to see here is that there's a way to minimize your risk and also collect some premiums in this market. Even though the market this week was red and major stocks were falling and we did have some credit spreads, we were still able to collect premium, keep some of that credit, and be successful. That just goes to show that even though the market can stay flat or go up or go down a little bit, when you initiate trades that are at good price points, where there's strong support, you are increasing your odds and you are bettering yourself as a trader. Because it's very hard to predict if a stock's going to move by X amount in a given week. But it's easier to predict that a stock's going to stay flat, go up a little bit, or come down a little bit. You give yourself a higher probability of being successful when you initiate credit spreads. For the debit spreads, the reason why I like those is because it's hard to predict when a stock is going to go up. But when you use a debit spread, you are minimizing the amount of money that you're putting up front. And also, you're being realistic with yourself. A stock can go to the moon, it can shoot up to infinity, and you would miss out on those potential gains. But how often does that really happen? And if you get into spreads like we did, where the spread is $5 and you're paying around $100, are you not okay making 500% returns if the stock was to go to the moon? And honestly, most of the time, where your spread is, that's where the stock kind of ends up anyway. So you're not limiting your potential reward. You're just reducing the amount of money you're paying up front to get into that trade. So using verticals like credit spreads and debit spreads, they can be really helpful for you to manage your trades, get in for cheap, and also they are great ways to increase your probability and manage your risk. So those are the kind of trades that I would be getting into right now in this market. And I would also be selling covered calls because I don't think the market's going to shoot up a ton. So covered calls should be pretty safe in your stocks. I wouldn't be selling cash secured puts on most companies right now because there is a risk that we see some kind of correction any week now. So covered calls are great for income streams. Debit spreads are great. Credit spreads, you need to be careful. But like we said here, if you pick stocks at good resistance and you don't over leverage yourself with a ton of credit spreads and you keep an eye on them and you manage them, then it's a great way to trade in the stock market right now. With all that being said, guys, I will create another report this weekend on some stocks that I'm eyeing up, some short-term trades that I'm eyeing up. My long-term positions remain the same. If you want to know what they are, join the Discord or just follow the channel. There's a ton of videos on what stocks I'm invested in long-term. None of that has changed of late. So with that being said, it's been real, it's been fun, it's been real fun, and this is We Are Investing, and together we are invincible. See ya!